One of the biggest fears that's affecting people who have Cronos token, or have any stake tokens in Crypto.com is this key looming question like a sword above their heads. Okay, is Crypto.com safe? Right? I've answered in another video before. Can there be a bank run? Can CZ or Binance do the same thing that they did to FTX? Can they do it to Crypto.com as well? Okay, so these are quite loaded questions, and let's deconstruct this step by step. Okay, so first, can Crypto.com have a bank run? Okay, let me be very clear with you. Okay, this is not financial advice. This is what I anticipate. That's what I think about. Right? I believe any exchange, crypto exchange or a bank, right, are at risk of bank run. Bank run is simply what happens in bank run is that people come to withdraw whatever they've deposited, right? And if the bank of the crypto exchanges do it right, and we hold a one-to-one reserve of what your customers bank in, bank runs are fine, right? When is bank run not fine? When is a bank run a problem? A bank run is a problem is when they do this thing called fractional banking or fractional crypto practice. Like for example, why FTX failed is that they're supposed to have 1 billion worth of customers' assets, but actually it's collateralized and they loan it out to play with the amount. So when people come to withdraw money, that crashed the token, which caused a margin call based on a loan, and then that caused the FTX value to drop. But they still have to pay out to people who deposited. So there's the depositors who are asking for their money back, and the people who offered the loan who want doing margin call. So that's why FTX was torn both ways, right? The question is that, how safe is Crypto.com? I can't answer you, because on one hand, Chris and the Crypto.com team has shown their proof of assets. It's unaudited, proper. They have shown a current one, which is about, let me see, what's the Nansen thing? Nansen. Right, Nansen. So Crypto.com show that the customers' deposits right now is about $2.3 billion. Okay, but it doesn't show debts at all. So I cannot accurately say that they're safe or not safe. If they have 2.3 billion and it's 1-to-1 of what of their customers, and that means this 2.3 billion belongs to customers, and they're just holding it as custodian or on behalf of the customers, it's fine. But if you tell me that, oh, okay, there's 2.3 billion in customers' tokens, and they themselves have another, let's say, 2.7 billion, right? But their debts are like 27 billion. I know that be a problem. But I do not know. I have no visibility. But based on this, if it's truly 1-for-1, and Chris said that they don't practice, what they say, they don't farm out their customers' money for yield staking, that they don't do trading, they don't run hedge fund so there's no risk of trading loss. Therefore, if that's the truth, then a bank run wouldn't harm Crypto.com at all. Then the next question: can CZ and Binance do what it did to FTX? Can they do it to Crypto.com? So FTX was hurt by CZ and Binance simply because they were at a very risky position. When they loan out money based on the tokens that they have, they collateralize their tokens. And the problem is that Binance had a lot of their tokens as well. Binance had how much of FTT? Let me see. I remember they had 500 over. See? Binance said that they say a 5% supply left, but when they had it, right? So that means they sold 95% of their bag. So what happened with Binance and FTX is that Binance was an early investor into FTX. So that's why Binance hold a lot of FTT tokens, the tokens that's issued by FTX. Let me see how much, right? So, see, they had $580 million worth of FTX tokens, which is FTT. Then when Binance announced that they're going to sell it off, and they refused to do an OTC, which is over-the-counter deal with FTX, right? So that's really pushed down the price. There's a sell pressure, push down the price of FTX. That caused a lot of fear, and then people started rushing to FTX to sell. So when Binance sell, depositors sell, the price started dropping. Remember, FTX took loans based on the token's value that they hold. When the value dropped too low, the people who loaned them money wanted to claw back the amount that they loaned out. That's called a margin call, right? And that's what happened to FTX. They were in a weak position. Is Crypto.com... Oh, sorry. Hold on. Oh, okay. Back to the video again. Okay, so as I was mentioning, FTX had two weaknesses. It collateralized their loans. It had collateralized tokens, and it had a big chunk of FTT tokens with Binance. So that created a perfect storm. Now, can Binance do this same move to Crypto.com? Unlikely, because Binance likely don't hold a significant chunk of Crypto.com's token, which is CRO, right? Number one. Number two, right? Most of Crypto.com's tokens are staked, are very stably staked, be in their crypto exchange, where you can get 8-10% per year, or in their cards, where you can get about 1 to 8% per year. So there's a lot of it staked. So there's a lot of stability. Then if you look at their DeFi, right, they have about another 600 over million of CRO stake. So there's a lot of stability when it comes to the CRO token. It's not so simple for Binance to try to do the same maneuver on Crypto.com. What they will probably try to do, if you look at it, it looks very coordinated. To weaken Crypto.com, what they probably have to do is do a lot of FUDing. Binance will have a lot of paid actors or unpaid actors. How I wouldn't know for sure, right? And really FUD the heck out of Crypto.com. Okay? Another thing is this. If Crypto.com is so stable with so much CRO locked, be it in stake, earn, DeFi, right? And within the own company itself, and therefore Binance probably cannot play around with the tokenomics, cannot play around with tokens, right? So basically, CDC, Crypto.com, probably just have to shrug it off and just go on business as usual, which is what Chris said, right? Chris doing the ask me anything later. That's it. So you see, that's why Chris said this. That's all there is to this. It's done. It's sorted out. All systems are operating normally. They are responsive, and business as usual. Again, I have to remind you, this is not financial advice. This is crypto. Crypto is very speculative. It's unregulated, so anything can happen, right? So to answer the question, is Crypto.com safe? I can't tell you with 100% certainty that it's safe. It's centralized. So with centralized, that means there are central parts of the company that makes the decisions. So if you cannot take the kind of risk or uncertainty, okay, you should really offload all your crypto into hard wallets or cold storage. You know what I mean? That should go. It doesn't matter whether you have you want offload from Crypto.com. You should offload from Binance, Kraken, Gemini, KuCoin, Coinbase. Basically offload from exchanges and put your tokens into hard wallets and cold storage. That would offload a lot of your exchange risk. You know what I mean? And also, crypto is quite speculative. So if you don't like the big ups and downs, it can be quite speculative in that sense. It's okay to go back to withdraw back into fiat, back into normal USD or your country's currency. You know what I mean? Make sure that you're not overly exposed. Not more than 10-20% of your net worth should be in crypto, unless you are really, really bullish on crypto, on blockchain as a whole. I am bullish. I'm truly bullish, which is why I have quite a chunk there. I believe in crypto, not just for the tech, but I believe also it's a wave to be caught, and that we're really early to the game, and I'm willing to take the risk to hold on tight and go through as far as I can with crypto. But that's me. This is not financial advice. This is me. I'm sharing you what I'm doing to increase my wealth, my portfolio, my passive income streams, be it offline and online, right? So that I have a better life for myself, for my wife, for my kids, for my next generation. That's how and why I'm doing what I'm doing right now. Okay, so is CDC safe? Probably as safe as can be, but again, who knows, right? It's crypto. It's a centralized exchange. If you're not certain of if you're not certain of centralized exchange, you should be not certain of all centralized exchange, because to me they're pretty much the same. Okay, they run based on centralized decision makers. Put your crypto in cold storage, hard wallets. That's the safest thing. Or take it offline. That means go back to fiat. It's probably safer that way. You know what I mean? And that's all I have for you today. So if you like this video, hit the like button, subscribe to my channel, and that's all I have for you. Stay SAFU and get rich, boys.